Here we go.
Now.
Here we go.
Yeah.
Okay, let's get started. Welcome all. It's nice to have all of you in this session. Thank you very much for joining the awareness session on 5 Mastery Fund. What do? We're making middle class become financially free using small starting capital. This webinar is supposed to last about an hour. We've already lost some time, so we hope we could make adjustment for that. Before we go, the government regulation requires us to make a disclaimer, as you see it here. It's basically saying this investment, as laudable and beautiful as it is not meant for everyone. Your remaining in this webinar means that you understand that this is not an investment for everyone, but those you will see later as described as qualified to do it. And please consult your attorney, your financial planners, and all the necessary people you need to consult before making your final decision. With that, we'll get started. Why this service? Why this service? Well, it started as a difficult situation my family and I encountered in 2017. After that, you will also then hear my name. In 2017, I used to work for Shell International, and they sent us on assignment in Australia. It was going to be beautiful. We were going to enjoy the 4 years. And what we then decided to do was, let's just enjoy this assignment. And we decided to take our money, which we've accumulated up to about $1 million then, and gave it to a hedge fund manager who we have interviewed and are doing very well. It started well, and I could see that some of us in this webinar, I also went out to them enthusiastically. They put in some money. Precisely on about September 1, 2017, we checked the account, we found that all the money had gone. They turned out to be fraud. They stole our money. Despite the effort to apprehend them, we couldn't. We involved the London police and everybody, we couldn't. It was a very, very painful time. Why was it painful? Painful on so many grounds. Number one, $1 million was a lot of money. We lost that. But good friends, like some of you in this call, who put in their money. So also our family name, our name was at stake. And that was painful to everyone. And then it got worse. I went into my patio in the evening and told my assistant, please look after my new team for me. I think I need a few days to take time off to be able to focus on myself. I couldn't tell him I lost $1 million because we're just new on ground. He said, okay. So we went to bed, I woke up the next day and found that I left my computer in the outside. And so, because the weather is beautiful in Australia, you could do what you like. And then as I tried to pick it on the chat box, another staff pinged me and said, Peter died. That was his name. So the assistant I talked to yesterday died. So I don't know now whether I'm crying about my money or that my staff that I just lost. Now I turned to my third in command and said, can you please help me hold the team? And he said, no, I can't. Why? My father is dying of cancer. I'm just trying to hold myself together now. I can't do anything. I said, oh, now me too. Then I turned to my fourth in command and said, can you please help me put the team together? I need some time for myself. He says, no, I can't help you. What's the problem? My wife has just been diagnosed with cancer. It's an early stage, and we're so devastated now, I can't even think well. They say it in my language that when a big problem falls you down, then small ones can climb on top of you. That was exactly what was happening. So I had to become a parent to my team overnight. I couldn't mourn the loss of my money because I have to keep the team going. It was very difficult. I became depressed. My family were devastated. It was a difficult moment for us. But here is something I want to tell you in this webinar. take care of your skill. If you have your skill, no matter the difficulties you may face in life, usually you'll be able to build back up. So we regroup as a family and said, we raised this money ourselves through our own business. We wanted to relax. Now it's gone. Let's regroup again. Long story short, we regrouped and put in a little money again and start trading. We lost that money. Why? Because we did not have the mental fortitude that a hedge fund and trading demands out of the trouble we've just gone through. We will tell you how we got through that. Just hold it a moment. It's going to end well. So this service is about small initial investment that we can grow. That was the problem we had. Small investment that we can grow. We didn't have a lot of money at the time. So if you have small money, we will help you grow it. That's what we needed at that time. We need an authentic and transparent investment vehicle. Those guys were fraudulent. If they had been transparent, we would have seen the handwriting on the wall early to do that. We also need an investment where we can achieve financial freedom within 10 years. I was already 48 then. I was going to retire early. And so I needed a vehicle, my family, that can take us there. So that was our short list. And then we started looking at other kinds of investments that we can do to do that. We look at mushroom, transport business, and all kinds of things, but it didn't take us there. Eventually, we came back to what we know, which is this asset class we're going to introduce to you today. Our breakthrough came when the family put head together and said, you are a computer scientist, Dad. Why don't you give your head to the computer? And that's what we set out to do. We decided to automate our system, and that's the product we're presenting to you today. We've successfully used this system now for about 46 months, producing very good results that we'll talk about. And we're happy to report to you, we're back to financial freedom. We're back to a state where we could take care of our needs, which has also allowed me to get out of my paid employment and really focusing on this and doing some other things in my life. You are going to have questions in the course of this webinar. Please type your questions in the chat box. I will take a break at some points and look at it. We will also take question and answer at the end. So that's what we expect you to do. Type your questions in the chat box, or you could write it down. Then during the question and answer session, we can deal with that. Why we are focusing on the middle class is this. We were middle class. We understood our challenge. So after 3 years that we've been running this, the decision was that if this bastard who stole our money got so much money and they are fraudulent, there are a lot of middle class out there that really needed this investment. We think we could create a product that could be of assistance to them. And that is how we started this business in 2020. And we've started to invite a few friends, tested it out, and now it's grown to a full-fledged hedge fund, which we're going to learn about. But let's talk a little about the middle class. Ask yourself this question. If you lose your job today, how far away is your financial death? We define financial death as how long you could live without your salary at the same state before you start falling down from it. That's the financial death. Is it 1 month? Is it 2 months? Is it 3 months? That's a rhetorical question, but it's very important. A number of us in middle class, we earn good salary, but when the salary goes away, we quickly fall flat. That becomes a challenge because we don't have very good investment vehicle that can help us to maintain our status. The average salary earner is not financially literate to invest their money efficiently. I was probably too busy in this case about my secular work that I couldn't analyze these people well. Although we've also seen people who are more shrewd than me fall into fraudsters. Those who are literate struggle to find a place to invest to get the right yield. So this is the thing about the middle class. Now, to help the people who are starting late is what we want to do. If you are 25, you don't really need this investment vehicle we are trying to introduce to you in terms of high level. You can start small and grow. Of course, if you meet this kind of investment we introduce to you, you just hit the jackpot. But if you are 40 and above, it becomes more challenging because you need an investment vehicle that can return better than the stock market or the S&P 500 for you to get the financial state you need. So that's why we think this investment vehicle will be good for the middle class. Now, here are some struggles. There are no shortage of money, except you are short of ideas. We found that many of us in the middle class actually lack the financial literacy to be able to get to where they want to be, which is why one of our things, which is where the name comes from, 5 Mastery. We don't just ask you to give us your money to make money for you. We organize webinars to give you these 5 areas here: life purpose, self-control, relationship, health, and financial education. It is free for all our investors. It is optional to attend, and you learn a lot from there. So how do we do it? How are we able to say that we can help you? How do we do that? Well, we have an open-ended retail forex hedge fund that may be too technical to you, but we'll cover that in future webinars. But we have a system that is 99% automated. What is the significance of that? It's so many. The computer does the job. It doesn't sleep. It doesn't complain. It doesn't doze off. It will do what you ask it to do. It's never afraid. And that's significant. There's a second thing. It makes our overhead very, very low. As you see me emphasize here, our fund overhead is less than 0.1% of our asset under management. The average industry is about 5%. We're doing at 0.1% because we let the computer do the job for us. We are saying that if you give us your 100,000 today, by this time in 10 years, we expect you to have 3.1 million as your capital. And that is still discounting the money that will give paid to you every three months when we exceed our target. Despite what you would have taken away, we expect you to still have 3.1 million in there. In the industry, we have what is called carry fee. What is our carry fee is 20%. So what's carry fee? When we make profit for you, we share it at 80-20. So that's what we call carry fee there. Another name for it is called performance fee. But look, our management fee is 0%. The industry is 2% of the asset under management. At this time, we're charging 0. Why? Because we want you to grow. If we want you to grow, then we should be able to allow your funds to grow quickly. In the future, we will be charging management fee, but if you join us today, up to the level of 5 million, you will not need to pay that. I already talked about what we teach, but all this is good story, Sam. What do you guys make? Well, we could tell you last year, the minimum money we made for investors is 65%. So we returned more than 65% in last year, and we expect to be able to beat that record this year. Don't forget, write down your questions. Write down your questions. This is our team. This is me, Sam Adegoju. Now you know my name. At slide 6. I'm a computer scientist by background. I've been in the hedge fund and trading industry for 21 years. I have first and second degree in IT, which has helped me to do the automation we do. And before now, I work for a Fortune 500 company. I work for Shell International as an IT executive for 23 years until I left recently. Here is the CEO of the company, who also happens to be my wife. I have the best job in the world. I am hired by my wife. If she fires me, I end up in her bedroom. So I'm a happy guy. Okay, so that's it. We run this together. Eunice has been running this company now since 2004. She's also had a stint as an IT executive, providing VIP support in different parts of the world when we still used to work secularly. She's also raised 3 beautiful kids who also work with us in this firm. So that's what we do. This is our attorney, our resident attorney, and this is our finance person. We have an array of partners who work with us. You could see their name here, but there are a few we want to point out to you. This is NAV Consulting, it's the fund administrator. They are important because they are there for checks and balances. and to make sure that the fund is properly managed and regulated. Deloitte is our auditor. Before Deloitte can audit you, it means that they have checked us and found us to be okay. So that's what we have. A bank is a US bank, BMO Harris Bank in the US, and we have these consultants that we do and the brokers here. Again, keep writing down your questions. So what's our goal for you? What's our goal for you? What are we trying to make you achieve? We want to coach you to achieve financial freedom, and we will coach you to achieve financial independence. What's the difference between these two? Well, according to our own definition, there are differences in this. Financial freedom means that you still earning income, but you have enough money that equals your salary. So if your salary is £50,000 a month, if your investment, like the one you have with us, is producing 50,000 or more, you've achieved financial freedom. That's our definition. But in that state, you have to continue working, because if you stop working, you'll be eating from your investment, and that will not grow properly. You will have attained financial independence when you get to the state that even if you stop working, you have enough money coming from your investment that you don't need to work again. Let me say this caveat. We're not encouraging you to leave your work. We're just saying, choose to do work that you like. Work where you like, work when you like. It's a beautiful thing. I'm going to read this quote. It is a thing of joy and freedom when you work, not because you have to, but because you choose to. Last year, I cut my work to 4 work days. Every Friday, I do not work. You need to see me every Friday morning to know that I don't have to get up to even do my private business. It's a beautiful thing. And that's really what we want you to get to. Keep writing your questions. We will get there. So what is our asset class? So every hedge fund, we have an asset class. Some it's building. For Warren Buffett company is buying up companies. That's his asset class. For some it's crypto. What's our own asset class? Our asset class is called Forex. What is Forex? Foreign exchange. Buying one currency against the other. That's what we do. The question, therefore, is why Forex? Why will you choose Forex as an asset class? A lot of people, once they hear Forex, they run through the door. Well, we will give you some education on that. But I just want to make sure you're hearing me, so I'm going to ask my first question. Please type in the message. On a scale of 1 to 10, I want you to type for me your knowledge about this Forex asset class. Just type in the chat box. 10 means I know a lot about it, and 1 means I don't know much about it. Please type in the chat box. I just want to see how we are. 10, I know everything. Okay, not bad, not bad, not bad. So that's good, not bad. Thank you very much. So I will assume that we are a little bit above the beginning, and then we'll explain it. So Jessica, the last time you went to the US, you needed to exchange pounds for dollar, because when you get there, you need to spend money. Even when you take your credit card to the US and you buy something in dollars, it's going to convert it from pounds to dollar for you. That's essentially what you do in currencies, to convert the pounds to dollars. There are companies in the world, like the one I used to work for. Their headquarters is now in the UK, but they have a business in the US. When they make their money at the end of the year, they need to bring it back to the headquarters. They will have to convert the dollar to pounds and move it to the UK. When they have a new oil field that they need to do in the Caribbean, they will have to convert the pound from the UK head office for whatever currency they spend in that Caribbean company. So in this case, money is being exchanged every time. I tell people who say they run away from Forex, I told them, but you are doing it. Every time you do a transaction, you buy something from Amazon, from China, other places, you're actually exchanging currencies. So the way we do this is we do it in the international foreign exchange market. We are speculative. If we think Australian dollar will go up against the US dollar, we buy the Australian dollar, we sell the US dollar. That's about all you have to know now about that. Okay, so why that asset class? These are the things we put in here. It gives us a lot of opportunities. It gives us what we call low margin. What do we mean by that? With small money, we can get a higher leverage. If you have $1,000 with your broker, it can give you 500,000 worth of money to do business. So we don't have to go to the bank to borrow money. It means that with little money, you could do that. And that's why we can ask for only 100,000 from you today to invest, because we'll be able to turn that around quickly. It is predictable. We can use computer to do it. One of the reasons we don't do crypto is that it's still difficult to predict crypto now because it's still very new. That's why we don't do it. It's very liquid. Every day, there are more than $5 trillion traded. The largest stock exchange in the world is the New York Stock Exchange. But the whole of the trading in New York Exchange every day is not up to 10% of what happens in the Forex world. So this is the biggest market in the world. It is beyond speculation. It's the world engine. It's highly volatile and therefore not as volatile as crypto, and then we can make some money from that. And we can hedge against other investment. But here are 2 points I really want you to pay attention to, why we decide to zero in on this. So I want to raise these 2 points with you. Please look at the screen. You're going to take your next question. Do you know the name of this guy? Type the name in the chat box. This guy wearing 23. Type his name in the chat box if you know his name. What is his name? One person has made a 2 people attempt. Let's see. One more. Yes, that's correct. That's correct. Okay, next question. What is the name of this man? The one higher up here, the one wearing black. What's his name? Type it out. Type it out. You can also say you don't know. It's okay to type I don't know. Type it out. It's okay. You can write I don't know. It's fine. Okay. It's question mark. Okay. All right. That's fine. I'll reveal his name for you in a moment. Okay. You will see his name in a moment. So that's, you will see his name in a moment. His name is Fan, not LeBron. He's Fan. Who is this guy? He is #1 table tennis player in the world. So why don't you know him? Is it because he's from China? No. Based on research we've done, the reason you don't know him is that he's in a sport that is not as popular as basketball. He plays table tennis in China. I play table tennis for fun. He is as skillful, if not more skillful than LeBron. But he makes 1%, maybe less than that, of the money LeBron James makes, despite his skill, because he's in a sport that does not attract much money. That is one explanation why we decide to zero in on Forex asset class. It's a business that commands a lot of money. So we decide to follow the money. So that is one reason. LeBron is making a lot of money, not only because of his skill. There's a second reason, and we're going to review that to you. Do you see this small print here? Please type this number I put in circle. Type it for me. This number that I circle here, just type it on the chat box. Just type that number. Oh, cool. Thank you very much. So it's saying that this is one of, used to be one of our brokers, saying 75% of retail investors lose money. In other words, the success rate of you as a trader in the foreign asset class is only 25%. If they take 100 traders, 75 are going to lose money, 25 are going to make money. We happen to belong to that 25. So why is this significant, Sam? This is why it's significant. For one LeBron James that make it to the NBA, there are 1 million kids that have gone to basketball clinics that never made it. So when you succeed to get to the NBA and sign your first contract, even when you have not played your first game, you're already a millionaire because of what it offers you. Because it's so difficult to make that breakthrough, those who make the breakthrough are well paid. The system we're presenting to you today took us 21 years to put together. Tears, pain. You will soon see my picture on the first day I traded Forex as we go on in the future. So those are two key reasons you need to see why we are here. Because the success rate is so low and we happen to have found a way to be in this asset class, the return we make is phenomenal. Keep typing your questions. Keep typing your questions. So how do we do? How do we ensure we could make you money? We've designed a system. It's called 5 Mastery Investment Strategy. We're trying to patent it now, and we designed it after this man you see here is an American Nobel Prize economics winner. His name is Harry Markovic. He came up with a theory on the capital market, which he called portfolio rebalancing. We took that and modified to our asset class, and that's what we use. We will explain it to you as simple as possible. It's a little bit more complex, but in a way we try to see. You will see lately that there have been many gurus proposing that the US market is going to crash. And then last year they said so. 2 years ago they said so. It didn't crash. 3 years ago they said so. Eventually the market will crash one day, and then they're going to say, oh yeah, we've been telling you. What they won't tell you is that they've been predicting for the last 15 years and it hasn't crashed. But people are then also afraid about crashing and all of that. We've designed a system to know that if there are no market crash, there will be no market. So fine, it's okay for the system to crash. That's what this is about. We will keep making money. If the system crash, we are okay there, we will do that. Then we design another one that says this should be like our hurricane bunker. Even if the system is crashing, the market is crashing, this one will survive. So we put some money here, we put some money here. Because we know market will eventually crash, what we do is periodically, we take money from here and put it in this place. So that's this arrow you see. So if what we call the black swan comes and kill this, we've been taking money and put here. We put this, we take money from here and put it back and we begin to build it. Why is this so successful? Last year, this strategy returned 95%. So even if we lose the whole of this money in 1 year, we put everything back. That's why we do that. But here, this one returned about 45% because we're very conservative there. This is the one that if this crashes and lose, then it's the one they say in my language, the death that kills everybody. You don't need to worry about that because you are all dead. You don't have to cry. Okay, so that belongs there. Despite that, we give out some money periodically so you can use this to enjoy yourself. And then we give out some money so that you can use it to buy asset classes that can be insured, e.g. real estate. Why do we do that if we are so sure of our system? This is the reason. As beautiful as our system is, you cannot insure it. And we want to give our investors some assurance. You have a house, you can insure it. Even if the house burned down, you can go and claim your insurance. So we want them to have some comfort. We want you to sleep well at night. We'll train you how you can conserve some of this money. In future, we'll run webinars that will fully focus on this, and you'll be able to learn more about that. Keep your question coming. Don't forget. Keep it coming, and then we'll be able to talk about that. Okay? We will have about 15 minutes for question and answer. So I keep going. So what's the structure of this fund? Well, we have what is called class A and B structure. It is open-ended. You have an initial lockup period of 2 years. You're going to have questions here. Should you write that? What we call lockup period is that if you invest 100,000 today, you cannot withdraw your money until 2 years is when you could start taking from it. The industry average is 5 years with lower ours to 2. But even though you cannot take your initial capital, we expect to pay you some quarterly dividends if we exceed our targets. We've talked about the carry fee of 20%, which is on high water mark. Our business is domiciled in the British Virgin Islands, which means you pay no taxes. And our fund manager is based on Australia. If you invest with us today, you have an advantage. You pay 20% carry fee as long as we have not hit 5 million AUM. Our asset under management is about 3.2 million today. As soon as we hit 5 million, we're going to increase our carry fee to 25. So it's now 25.75. But if you invest with us today for the next 5 years, you enjoy this. Once we hit 5 million, we also increase our management fee to 1%, and in the future increases like this. So take advantage of that. Okay, Sam, you've been saying that you guys return fantastic results. Show us the money, show us the numbers. This is the numbers here. As of January 2022, we started to the public in August 2020. We've made a return of 119.82%. It means that if you've invested 100,000 with us, August 2020, you will have $219,820. That's essentially what we're saying here. Here are the numbers. What you see here is our own private trading that we did before we put this to the public. In about 3 years, we had a return of 3,802%. We are not promising you this return. This is what we are promising you. We're promising you that we will make an average of 36 to 41% every year. Anyone who is not happy with this, thank you very much. Find another investment. Last year, we returned, as you can see, 65.13%. We are hoping we can make that again this year, and we're on track. January, 1 month has passed, 4.74. Our target is usually 3% every month, which is what we produce this. So we've met our first target for the month of January. Last year, we had a loss of 1.28% in February. We are hoping, and from the figures we see so far, we will turn it black this February. So we keep learning from that. If you want to see more of the fund performance, this is the QR code you can, and we'll send you the video of this slide. So you scan this QR code and you can see the detail about this. Don't forget, keep your questions coming. Nice numbers, but where are the risk? Well, we know about risk. 2017, we lost $1 million to ropes. But before then, this is me in 1999. You know, I was very handsome, plenty of hair, which is why Eunice was chasing me. Oh, okay. She never agreed she chased me. She just said I chase her, but it's okay. Ima, you'll be the verdict later, but let's pretend that she was chasing me just for the purpose of this webinar. So on this day, 1999, was my first trading day. I put in $10,000. I didn't know what I was doing. I lost the whole money on that day. I then went to the photographer. It's not these days that you can do selfie or have photo that can snap yourself. So I went to the local photographer. This was Warri, Nigeria, and said, please give me a picture. And he says, no, okay, you are not well dressed. I say, yes, just snap me the way I am. So he took the picture. The picture came out bad. So this picture came out bad. It's not because it's old. It actually came out bad. So it reminds me of Fela Anikulapo's song that says, dead body get accident. Yeah. So the vehicle that's carrying dead body had accident, then it becomes double whammy. So I was dazed, and then I had a picture that came out bad. So we know what it is to have lost money. We built this over the years. But what we are doing is what you see here, like this rat. He wants to eat this cheese, but he's very well aware that if he gets it wrong, this trap can kill him. So what did he do? He got himself a very nice helmet. Despite the helmet, it's not just going to put his head and try to eat this cheese like that and say, oh, I have helmet. No, while the trap, if it snaps, while it may not kill him because of the helmet, it could do some damage. So it's going to go as stealthily as possible. And I've seen some cases when I was in the village, they actually use their tail to snap the trap and then eat the bait and run away. So it's going to try as much as possible to eat this. And once in a while, if the trap snaps, it will make sure it doesn't kill him. You can link that to our strategy we talked about, why we survive. Here are some of the mitigations that we see, and I think it's very clear you could see them, and then maybe we could talk more about that in the question and answer session. Simply put, we have you covered. So what can you expect? If you invest 100,000, by year 10, you should have 3.1 million in your portfolio. And that's excluding the quarterly distributions that we pay for you. This is net of fees after we would have taken our money. But here's something I want you to take away. You need patience. You need patience. Ima, what is patience in, is it ethic? What is patience? Tell me. You're allowed to speak, Ima. Okay, he's thinking, he's looking at it.
Patience is Ime.
Is what?
Ime, I-M-E-H.
Oh, okay. That's why people have that as a name. I never knew that. Oh, now I have a friend who's Ime. Now I don't know that. Thank you very much. So you need Ime. Yeah, one of my schoolmates, that was actually his name. Actually, you actually need patience. See example of why we are saying this. I just want you to follow this. One, we are using compound interest. Compound interest also needs patience. Look at year 2. After 2 years, you have 100% of what you put in. So in 1 year, you have times 2 return. But look, in year 7, which has about 5 years, from year 2 to year 7, 5 years, you have 5 times, that return. But look through here, year 7 to year 10, which is just about 3 years, you move from 7 times to 31 times. If there's anything you take away from home today, look at the number 5. You need to be patient for about 5 years for your investment to turn to what we call AMROBA return. A lot of people are not able to do that. It becomes like this plant. If you have started plucking the leaf when it's just here, it will either die or become stunted. But if you can wait until it's got many leaves and you start plucking some, then you do that. What's the significance of this? Depending on your earning power, don't bring all your money to us. We don't want that. We want you to invest money that you can live for some time so that you can live your normal life and you be patient and allow it to grow. So please think about that when you are investing. While you may be able to invest 500,000, maybe you should just do 100 and be patient with it. Or you do 200 and be patient. It's about patience. It's not about how much money you start with. That's something to know. We're also showing you here, when an aircraft takes off, it uses about 70% of its power. But when it gets to cruising altitude, it uses less power because it's now overcome the Earth's gravitational force. You need patience to be able to get there. All right, we'll be going in now towards the last part of this. The frequently asked question: how much money will it cost me to invest? How do I qualify? Here's the requirement. Minimum 100,000 US dollars equivalence. You need to do a self-declaration that you are worth $1 million. That's self-declaration. They're not going to check your bank account. You're not a US person. That's person who is either a US citizen or pay tax in the US. That's what it means here. And this is the reference for this one. How can I invest? Easy. Send us 100,000 or more and you're home and dry. What if I don't have 100,000? We've worked to help you to see how you could do that. You could do what we call collaboration, get together with friends and make up 100,000 or more as a joint investment. That's acceptable under the law. Or you can form a company and then you pool funds together and then you invest. That's also allowed. So once you are ready to invest, scan this QR code, you will fill a form and then we'll take it from there. Please, this URL doesn't work now because we're doing an update on our website, but this QR code works. And so you register, you sign a legal agreement, you wire your fund, you sit down and see your investment go, and then we start to coach you and help you develop. It's question time. Let's go for it. Questions, please. I'm all ears. Eunice, do we have some questions that has come in?
None for now.
Okay. You could either type your question or come off mute and ask the question.
Hi, I've got a question, sorry.
Go ahead, please.
Hi, thank you for the presentation. It was very informative. I just want to know from like your sort of point of view why you think a lot of forest traders lose money, because there's a lot of controversies out there about forest trading.
This is why they lose money. The industry gives knife to a small child. And when you give knife to a small child, he can have access to that knife, he's going to cut himself. If you give the knife to an adult, the likelihood of cutting himself will be very rare. That looks philosophical, so let me give you my practical experience. Why did I lose $10,000? Why did I do that? I did a research. I was living in Nigeria and I was a Nigerian citizen then. I'm no longer one, but I was a Nigerian. And then I saw the Naira losing value over time. And then I said, what if I can have an investment that generates dollar and not Naira? Then that will be more sustainable. And then I started doing research and then I saw forex trading that you can generate dollars. And then I put in $10,000 and start trading. Of course, I'm going to lose the money. So the challenge is that you cannot be a doctor by just putting on a white robe and stethoscope around your neck. You're not allowed to. The government will not allow you to practice. You cannot be a pilot by just, like my son has, play some simulation thing and then says he starts flying. The government will not allow you to do that. Unfortunately, the government allows you to trade the forex without being properly trained. Why do I use example of this? These are a neurosurgeon and a pilot. They are one of the highest paid people in the world. And if you know how to trade forex, you will make more money than any of those guys. So, but what is alarming to me is the government allowing people, the entry is so easy, but the heel is very tight. The same thing is happening in crypto. Every toad is jumping in the pond because the world keeps deceiving everyone, trade crypto and make money. They keep telling you about those who make money. They don't tell you about millions who lose money. So in summary, it's one of the most difficult professions in the world. There's a time I asked my son, after I cried in my early days, and I asked him, have you seen me cry before, Tim? He said, yes. Oh, I was shocked. I said, when? He said, when grandma died. But forex trading made me cry in the early days. So that's why it's very difficult to succeed, and the government does not put regulation that you have to be well trained before you can do it. So the entry level is so easy, and that's where people lose money. Do you understand my answer?
Yes, yeah, thank you very much.
So if I were in government today, the same way that you don't allow a pilot to fly, I would also not allow people to do that. But I know that that would not be possible because you won't have a market. If everyone is sophisticated, there will be no market. Next question.
There is a question here I can see. What are the projected targets for this financial year?
Excellent question. Here is the answer. This one. This is the projection, the forecast here. So January, 2%. We exceeded it now. So February, we expect to make 2.4. We'll see that at the end of February. That's the projected target, net of fees. Next question.
This is Friday.
That's Friday. Sorry, I confused you about joining. My apologies.
No, no problem. It's okay. Yeah, the area I want to find out to get some more information is with regards to E5M, the business. We live in a very volatile environment business-wise, where many companies or businesses go bust within some time. And you mentioned something which is of interest. This investment needs patience, or like Imam mentioned, IME. So from the projection you had, you should, it takes a number of years for one to get back the returns that we would say, yeah, that's worth it. So what guarantees do we have? What do we have in place to give such level of guarantee that E5M will not go bust and then the investors lose, as it were, while we were still waiting for the stuff to come, the time we will get the independence or the freedom or whatever comes. But before then, what guarantees do we have that E5M will not go bust?
Okay, thanks very much. The regulation does not allow me to tell you there's a guarantee, so I cannot say there's guarantee. If I do, my license will be seized by the government. The government will not let me say so. But I understand your question. I'm going to frame it as how does your strategy ensure that customers can be saved? Now, let me be clear. I wish I can tell you there's 100% guarantee. That doesn't happen. Yeah, in any business, anyone who tells you there's 100%, that's a red flag, that's cap. We don't have 100% guarantee. This is not for everyone. But here is the way we've done it for you to do that. Look at here. By year 2, end of year 2, you already get close to getting 100% of what you put in. So this year 10 that we're talking about, we're talking of financial freedom. We're talking of your money getting to the point where as if you're almost legally printing money. So don't confuse that with getting back your investment, okay? So that's the first thing to know. By the end of year 2, based on what we see, because of compound interest, you get 40%. If you make another 40%, we would have given you. And since at the end of year 2, you are allowed to withdraw money, you can take some money at the end of year 2. So that's one way you can do that. The second way is that every quarter, at a certain point, when we exceed our targets, we return some money back to you in form of what we call distribution. So let me illustrate what I mean by that, because you've really answered a good question here. So let's say now that, so this is January, February, March. So just roughly, let's say that we expect to make about 7% or 7.5% these 3 months. Let's say we end up with 12%. We will return some money to you because we're exceeding our target. You could decide to reinvest that money, or you take it out and keep it, or you take it out and put it in your mortgage or doing something. So you're already taking some money out. So you're not going to wait until year 10 to be able to get some money out as we see it here. So that is the two ways by which we allow you to do this. So we expect, for example, that based on the distribution and your ability to take things, you easily have recouped. And what is left here, we call it money of the house, is what then you are allowing to grow. Does that help?
Yeah, thank you.
I mean, webinars and all of that will take you through how you can do more of this, which will not cover fully today. By the way, my pension is also in this fund. So that tells you how long we want it to be. And my pension is, yeah, that's it. Next question. We're on top of the hour because we start late. If anyone must leave, thank you very much. But please be aware that we are still here for you. I think, Jessica, you have questions.
Yeah.
Yes.
Yeah, hello. Thank you. I just had a quick question about, the distribution. So they're distributed quarterly. So how is that calculated? Like how much you get? Is that based on how much you invest in the beginning? I wasn't sure I understood that
what you
part.
get is the proportion that you invest. So this is how we come about it. We estimate that we'll make an average of 3% return every quarter. If we exceed that and other conditions are right, which we don't need to go into here because of complexity, the fund manager, discretionary, please, this is discretion, right? It's not cast in stone, can decide to give out a distribution. And let's say we declare distribution of X amount of pot of money, what you get will be proportional to the amount of money you invested. Is that clear? So the person who invests 500,000, we obviously get more than the person who invests 100,000. Percentage-wise, it's going to be the same, but the actual money will be proportional. So we have a big pot of money, we share it proportionally. The same way, profit every month is shared proportionally to what you put in. Is that clear?
Yeah, thank you.
Yes. Next question coming from who else?
Hello.
Yes, please go on.
Yeah, I have a question here. It's Maynard.
Yes, Maynard, go ahead.
Yeah,
Sorry,
Jessica
I
has,
think I spelled your name wrong. Sorry, now I see it. Go on.
no, it's fine. Jessica asked my other question that I was going to ask, but I do have a follow-on question. So in terms of the investors that you currently have on the books at the moment, what sort of numbers are you looking at, which can then obviously give an indication as to when you do the divvying up once you have the profits? Because I think, like Friday mentioned, I think hesitation is usually around people waiting for a long period of time before something maybe pays off or matures. But if there is a payout at some point, it's probably looking at, what sort of payouts are people expecting. So what sort of, how many investors do you approximately have on your records?
Okay, so our investment is irrespective of number of investors. It doesn't matter to us. Whether it's 10 or 50 or 20, it does not affect what we do. Yeah. Actually, going out to take investors is our own way of giving back to the society, just like you see from what we said now. This is our own way of reaching out. First, as a family, we have more money than all investors combined as of today. Yeah. So if you combine all the money of all investors, we have more money than everyone combined. So that's one. So we typically say we could make a cake, we could sell a cake, we can eat a cake. Yeah, so that's something important. But what we are looking at is this. There are two things. One is within your power. The second is within what we make. So we expect to make 9% every quarter. If we exceed that and other conditions are right, we can give out some distribution that something outside this range. I say we can because there are other factors the fund manager will look at. That's outside you. That's based on our return. But there's something within your power. After year 2, at any point in time, you can call and withdraw some of your own money, either the capital or some profit. That's within your power. Is that clear? So your waiting period technically is just 2 years. After 2 years, you can withdraw 10%, 20%, 40% of what you have. No one is going to stop you from doing that. That's within your power. Of course, we will coach you and gradually help you to do that. Is this clear?
Yes, it is. Thank you.
Yeah. Next question. Anyone still raising hand? Okay, my turn. Friday, your hand is still up. You already asked your question? Okay, Ima, go for it.
Just to add a little to what you already discussed with regards to why people lose money in forex. And I don't think you did mention the effect of individual emotion.
Oh, great. Yeah.
That plays a big part too on the fund performance. If you want to monitor and react based on how the market behaves, and you want to do that on a daily basis, then you are bound to take some wrong decisions. You may pull your money out when you're not supposed to, or you may invest when you're not supposed to. But with a system that is fully automated, that aspect is taken out of the system to a large extent, and so you can predict to a certain range what the result will be. And that is why if you see on the forecast there, you have certain percentage, 3% profit month on month. When you compound that at the end of the year, that's the 41% return, which I think the best you can get in the stock market today is maybe around 20%, I believe, or so.
Yeah.
In the best of times, yeah.
Yeah. Yeah. Thanks very much, man. That's really great. The first 13 days of February, we had no money. We made no money. We had no trades. And some investors were checking with me because they could see that the money wasn't being made and say, hey, what's going on? And I say, nothing. The system is just waiting. It's never tired. It's never tired of waiting. And that's what Imam mentioned. That's what automation does for us. And we really appreciate that. Please be aware, we will not, so something you need to know, we will not take customers forever. Once we hit 100 million asset under management, we will stop taking investors. This 100 million is not that customers will deposit this, both the profit and what customer deposit, we are going to stop at 100 million. The reason for this is simple. I've gone out of paid employment. I don't want another day job. So I don't want to become Elon Musk. So there's a limit to the size and involvement I want to do. I want to get some other things done in my life. So based on our estimation, the number of customers we want to manage and all of that, everything should not exceed 100 million. So a time will come that we will not do webinars like this, asking for money. We will have to turn people back. Yeah, we're not there yet, but I know we will get there where we're going to stop. And if someone now wants to continue the business, fine, I'm happy to give that. But for me, I like to do something else with my life. Yeah. Okay. Thank you. Can I assume no more questions? Is that a yes? Something I want to ask from you, there's somebody, please, I want to add, can you permit us to add you to our mailing list so that you can be getting our newsletters, which we send out every month, and some articles. Please type yes if that's okay with you. All right. Thank you very much. Looks like this is how we stop. Please don't forget, always go to our website and we'll send you this video, and you can write to us. You will see our email when we send you the video link to do that. Please don't be afraid of 100,000. If you don't have it, you can pull together. Yeah, pull together and get that done. It's very easy to manage. It's not complex at all, because funds start at the beginning of every month, so you can know who put in what. Yeah, and you could add to your investment later as you go on. Those flexibilities are there. We want to thank you for coming, and we appreciate you, and please tell your friends about this investment. Thank you. We'll see you soon. Bye for now.
Okay, thank you.
Eunice, you could stop the recording.